Hey guys, what's up? This is Kangsha and welcome back to my YouTube channel. This video is the continuation of my previous video where I talked about support and resistance. That is a very useful video for beginners. So if you haven't checked that out yet, then please do. I'll put the link in the description box below as well as here so you can check that out. And in this video, I'm going to talk about what is technical indicators and 3 different kind of technical indicators that I use regularly. Let's start with what is technical indicators. Technical indicators are pattern-based signals which is produced by all the available data of price, volume, supply and demand of an asset. Indicators are the tools that take the historical data and apply formula to it. By analyzing the historical data, technical analysts use indicators to predict future price movement and to judge the entry and exit points for trades. There are 100 or maybe 1000 of technical indicators available in the market. Few of them are moving averages, relative strength index, money flow index, stochastic, moving averages, convergence, divergence, Bollinger Bands, etc. But as I said in the beginning of this video that I'm only going to share the things that helped me in my trading journey till now. So in this video, I'm only going to give you few examples of technical indicators which I use regularly. First in my list is volume indicator. Okay, why I am saying that? There is a saying in trading world that don't put your money where people's mouth are. Put your money where their pocket lies. Volume indicator actually shows you how many stocks have been traded in that particular time frame. It could be 10k, 50k, 100k or millions, but it will interest me as long as it is above the average volume. I will give you one brief example of how to use the volume indicator in this chart. In this chart, you can see that after price comparison, there is a big green candle with volume way more than average volume. It tells you that there must be big institutions involved in trading in that particular day. And after the big volume day, the price moves up exponentially with little pullbacks. Second in my list is moving averages. Moving averages are as it sounds like. Moving averages are technical indicators used by traders to see the average price movement over a certain period of time. So the blue line you are seeing on the screen right now is the 20 period moving average. That means this indicator took the closing price of previous 20 candles and divide that by 20 to plot this line. You can define the length of your moving average to be any number. Let's say it is 50. Then it will show you the average closing price of last 50 candles, and that's how you get the new line on the screen. Similarly, you can check moving averages in weekly time frame for any length of time. For example, 50 period moving average, 100 period moving average and many more. There are 3 reasons why I use moving averages as one of my technical indicators. First is it helps me define the trend. Obviously, identifying higher highs and higher lows, lower highs and lower lows are great way to define trend, but using moving averages can help you define the trend as well. Let's say you are working with 20-day moving average, so as long as the price is above the 20 period moving average line or bounces back from 20 moving average line, it is in uptrend. Similarly, if the price is below the 20 period moving average, then the asset could be in downtrend. To simplify this, a rising moving average indicates that the asset is in uptrend and the declining moving average indicates the asset is in downtrend. I'm not saying that this will work all the time. That's why we use different technical indicators, candlestick chart patterns, and different aspects of technical analysis all together combined to make better entry and exit strategy to make better profit. The next reason of using moving averages is to define the area of value. Moving averages can also highlight the area of potential support and resistance. That means the chances of prices bouncing back from 20 period moving average is better. Another reason to use moving averages is to identify your stop loss or trailing stop loss level. The next indicator that I sometimes use is RSI. This is one of the great indicators to identify the oversold and overbought regions. The RSI oscillates between 0 and 100. The RSI is considered in the overbought region if it is above 70, and it is considered oversold when it is below 30. Some traders use 60 and 40 instead of 70 and 30 for defining the overbought and oversold regions. But it does not mean that you should instantly sell when the RSI moves above 70 and you should instantly buy when the RSI moves below 30. The RSI is fairly simple formula but very difficult to explain without pages of examples. In this screen, you can see the basic formula of RSI, which takes into account average upward price change and average downward price change. The RSI can help you identify the overbought and oversold region, but apart from that, it may also indicate a trend reversal or corrective pullback in price. Let's take an example of this chart to understand the concept of relative strength index. First, I will open the settings and choose the RSI upper band and lower band levels. I am defining them as 70 and 30. In this chart, you can see that when the RSI hits 30, the prices moves up. And as I said earlier, that RSI may also indicate the corrective pullbacks. So in this chart, you can see that when the RSI is in overbought region, then there is corrective pullback in price. I want to put it out there that this should not be the only indicator you should use. It is better to combine this indicator with different technical indicators and chart patterns and trends to make better decisions. It is an indicator that actually tells you that when prices are moving up or down for a long period of time. Technical analysis or using technical indicators may seem overwhelming at first, but when you practice it with every chart, then it will make you better at it. So that was my video, guys. Thank you so much for watching this video, and I really hope you find this video helpful, and if you do, then please give it a big thumbs up. And if you have any question, then please write in the comment section below, and I will try to answer those to the best of my knowledge. And in my next video, I will be talking about another aspect of technical analysis. So make sure you subscribe to my channel, and thank you so much for watching. Bye-bye.